If you have a tax loss, even if you have a loss for the year, if the stock market's up for the year, no matter what, you want to harvest those losses because it allows you to shelter gains that you might have taken earlier in the year. If you happen to sell Facebook at the top and you had some gains there, you could shelter it or use it for next year as gains come.
Well, so that's my point. Let's say, because unfortunately this year, a lot of people might have a lot of losses.
Right.
How do you know what to sell? Should I sell the stock I bought recently that's down 3%, or should I sell a stock that, is a little bit older that maybe I've lost 20% on?
You should sell both of them. And remember, you need to wait 31 days before you can reinvest in that particular stock. But if you sell an energy stock, for instance, FANG, Diamondback, you could go into XLE, a sector fund, and wait 31 days and then flip back into the stock.
That's important, because if you like the name at 20% lower than it was, you say, okay, I've lost some money, but I'm still long-term bullish. You can't just dump it and then buy it back on January 1st. That 31-day period is important.
And that 31-day period, you don't want to be out of the market necessarily. So go into an ETF, go into a mutual fund, go into a sector fund, and keep your broad exposure, but take your loss.
There's going to be there's so many different changes this year, is there not, Kevin? I mean, how hard has it been to keep track of? I mean, with obviously in high tax states like this one with the SALT cap on the deductions, but there's so many more things. How much different are taxes going to be this year from years past?
They're going to be significantly different. People are used to itemizing deductions, and now the standard deduction is very significant. What that might mean for you or for some of your viewers is that you will be maybe bunching your charitable deduction. So instead of giving X to your church this year, you give 2X next year. So you look for opportunities to bunch. You look for opportunities to harvest. When you're taking money out maybe of your distribution, you can go and put that money directly into charity. So there's different tax strategies. But what's really important is taxes shouldn't drive your investment decisions. Investment decisions are primary. Over the course of your portfolio career, almost everything in your portfolio should be sold. Now, if that's the case, people are so reluctant to sell and take gains that they become out of kilter, out of balance with their portfolio. So maximize your portfolio and don't worry about minimizing your taxes.